Okay, Mark, I'm told that the sound is there. You are welcome to start your talk.
All right. Thank you. Thank you so much, Francesco, for the introduction. Also, before I kick off, I want to take this opportunity to thank ICTP, NITheCS, and CHPC for this monumental event today and the collaboration in making sure that data, AI, and technology are at the center of reimagining the future. I also want to thank the organizers for putting together the event and making sure that there's so much attendance from across the world. So I look after the data and analytics and data strategy for the risk function within the FirstRand group. And my responsibility is making sure that data and technologies such as AI are at the center of how we're becoming more efficient, how we're becoming more effective and proactive in the way we manage risks. When you look at what is happening across the world, globalization, social challenges, technologies itself have meant that we as a financial institution cannot continue doing things the way we used to do. We need to be more efficient. We need to use data and technology to make sure our workforce is more effective, to make sure that we're enabling various experts execute their functions much more effectively, and to drive innovations. If you think about it, we are actually leveraging technology to continue building trust. And at the center of this data, or leveraging this value, we've had to make sure that high performance computing is enabling us execute this function. So I will start this talk by painting a picture of the role of risk, the risk landscape in the financial institution. And then I'll share with you a lot of capabilities that we are working on within the organizations that are reimagining the future of risk management from a financial sector perspective. So as I mentioned earlier, the risk function is responsible for making sure that it informs the organization of various risks on an ongoing basis. Some of these risks are external, some of them are internal risks. But beyond the traditional risks we're talking about, we as a financial institution have to be compliant from a regulatory perspective. So we have to work within a spectrum of regulations that are guided by the prudential. In making sure this happens, my function as a chief data officer is to make sure I enable the organization to identify risks, assess these risks so that we are accurate and consistent in making decisions, making sure data and technology are at the center of understanding how the future is turning out, and implementing and measuring any mitigation strategies by making sure data is playing a major role of understanding the magnitude of these issues, or even how risks are likely to manifest within the organization. And when you look at it clearly, risk in a financial institution is the biggest consumer of data. In fact, someone said, if you think about it, a bank exists because of risk. And that's why it's a function that leverages data. And I will take you through a lot of examples, capabilities or use cases where data is playing a major role. So the risk management in the financial institution is divided into financial risk types and non-financial risk types, which look at the policy aspects of risk, operational aspects, and managing reputation risk. Just to dive deeper into financial aspects, this constitutes how risks may manifest in financial assets such as loans or even the trading book, as well as liabilities. And you can see a breakdown of types of liabilities in the banking and trading space. And as I said, on the right, these are run under the guidance of regulatory requirements. Data is playing a major role in this space, obviously, in understanding the credit risk landscape, the operational aspect, and how certain market factors affect our book, as well as making sure that we understand the affordability of our customers so that we lend to them within the regulatory guidelines. Then when you look at the non-financial side, which is basically the biggest form of risk, non-traditional risks that we're dealing with today and where data is playing a role, we have risks that emerge from the way we operate as a business. We have risks that emerge from the way we conduct the business of banking. And when you think about it, when we onboard customers within the organization, we're entering a contract. We are entering a contract that defines, for example, how much we charge them. We're entering a contract of making sure what we promise them from a product and service perspective, they should be receiving them. Then we've got cyber and IT risk. Today's biggest worry in any organization is the presence or potential for cyber attacks. And in this case, as much as globalization is helping modernize and give access to products and services across the world, it has meant that our systems are subjected to some forms of, some very complex forms of cybercrime. And I'm sure you've seen globally that a lot of organizations have already fallen victim to these types of attacks. Then Professor Mary Jane covered climate risk. As you know, when you have climate incidents, we as a financial institutions are directly affected because it affects our valuations, it affects our customers, which in turn that impact results to their ability to afford products or even fulfill their debt obligations and other types of risk related to climate events. When you look at these risks from the perspective of what the bank is in control of versus what it's not in control of, you realize this is the ultimate big data problem, because for things that we're not in control of, especially outside the organization, market risk, interest rate changes, we do consume a lot of data, external data, to make sure it informs our internal strategies. Then, while we're leveraging data and technology, we also have other emerging risks that come from the business of using data. For example, model risk, ethics, and things like that, that we have to think about. All this cannot be done in a manual or traditional way. A lot of this has to be done in an automated way. And the examples I will be sharing with you will showcase challenges of why high performance computing and big data are at the center of the work we're driving in modernizing our risk function. And on an outset, you realize that everything is integrated. Before, some of those risks you've just seen here used to be measured independently and assessed independently. But with data, we are able to have an integrated approach of assessing risks, responding to them, monitoring and reporting them. In case of fraud, we have to stop fraudulent transactions. For regulatory compliance ones, we have to work with the regulators as required. But also, data is at the center of driving a risk awareness culture, because data represents events that happen in our environment. So how is FNB leveraging data, AI, and computing to ensure that this happens? I'm going to share with you a few capabilities. Because of the complexity of risk and very high transactional space we're dealing with, we've had to combine various techniques to make sure that we're keeping up with these threats or how risks are manifesting. So for example, for simple types of compliance rules, we've had to basically leverage rules and to make sure that we generate alerts. And we're talking about transactional rules. If you want to know why high performance computing is very, very key here, we process about at least 3,000 transactions a second. You can imagine how much time you need and how much computing power you need to send a transaction to a rule to make sure that it goes through a compliance check before it comes back. Then we leverage exploratory analysis. These are business intelligence types of rules to identify anomalies and put controls or checks to make sure our rules are working as expected, but to also make sure we are compliant. For example, we have exploratory rules checking for pricing to make sure that we're pricing the customer correctly. Then predictive modeling is important because we have to follow a risk-based approach when we're looking at a lot of factors. Why is that important? It's very difficult for a human eye to look at 100 factors. So an algorithm is well placed to aggregate all these factors into a score that probabilistically indicates that its likelihood, it's suspicious, or there's a threat, or there's an exception that is present. Then the last one is the social network analysis, where we check for association, because some of the threats we're talking about are very, very complex. So for this to happen, there's a lot of data we've had to actually leverage. And this is just a timeline showing the maturity. At some point in time, over 6-7 years ago, we used to run algorithms once a year. But as we acquired more computing and as our algorithms mature, you can see that we've improved the process of assessing our customers for the presence of, for example, money laundering risk, which now happens in real time. When a customer is onboarded, they are risk rated to understand the likelihood of them being not compliant. Then on an ongoing basis, when something happens, when a transaction flows, we have to make sure that all these algorithms and rules are run on the customer's behavior so that we are proactive in identifying these risks. Then we've got the risk of fraud. And the risk of fraud has evolved so much because even fraudsters are actually leveraging technology. I don't know if you've heard of business email compromise, where a phishing email is sent to a banker or a customer and they're made to transfer cash into what we call mule accounts. What you see here is results. This is actually actual savings from some of our algorithms that are helping prevent this proactively. So with the computing power, we are able to score all transactions, rank them with the likelihood of being fraudulent, then take the ones at the top that are likely to have risk, and those are the ones which our investigators focus on. It's important because the ones at the top, or the ones ranked higher, are the ones with lesser false positives. And without them, it will have taken our investigators longer to get to the actual fraudulent transactions. So these monies are monies we save and we return to our customers. We would have had to actually pay out this money if we did not have these models. And what you see on the right are different types of other algorithms that we've developed for specific threats. Like, for example, we've got mule models, we've got procurement fraud, we've got account takeover. All these require bespoke algorithms, and without high performance computing, we will not be able to keep up with this. Let's talk now about risk assessment. When a customer has been identified or an issue has been flagged as suspicious, what used to happen is an individual will source a lot of data, create a view, put insights together, put a rationale, in other words, a statement that supports the fact that there may be a threat. Provide, then that view goes for quality assurance before a recommendation is made to confirm that the threat exists or not, or does not exist. That process used to take long. So can you imagine an environment where you're processing over 3,000 transactions a second, how long it will take to review everything? It will take long. So we've developed AI systems that operate almost real time, that put together this whole view. And instead of people doing this work, they are focused on assurance and recommendation. So we're driving productivity, we're driving consistency in the review process. And some of those consistencies where AI and computing are helping is in, for example, generating statements like this. This is an excerpt from one of the due diligence reports. So if you gave this profile to 10 people will give you 10 different views, but with the computing enabled AI system, you are able to get a consistent view. For our Mozambique subsidiary, we actually leverage the same technologies to translate to Portuguese. Again, we're benefiting the same consistencies. High performance computing enables us to create complex network views of how people behave and how they and how criminal behavior or risky behavior might be manifesting within our organization. So it's not only that, but you can see this is about 40 algorithms. And without high performance computing, how are we going to actually enable all these algorithms? So today, our risk assessment across all F&B subsidiaries is done with AI, powered with high performance computing. Now, let's talk about control monitoring. And this is where we check for exceptions for the business of banking. We are required to make sure, like, for example, the NCA in Duplum, FICA, these are regulations we need to abide to. So we've got over 10 million customers. It's so difficult to manually investigate each and every customer and transaction to make sure that we are monitoring, testing, and reporting any non-adherence to compliance. Previously, because of that limitation, and when we didn't have algorithms and computing power, we used to draw samples, but that was not effective. So today, with AI algorithms, with the enablement of high performance computing, we, in an automated way, create exception reports like this to understand where are we likely to be failing, where we're seeing an exception that is not in line with what we expected to do. It could be pricing. And this is the way we're maintaining trust. So by us identifying these issues, we're showing our customers that we're abiding to our agreement. And this is just a view of a few exceptions. And some of them you can see have amounts because some exceptions relate to fees and things like that. Another application is when we enter contracts with external service providers. What you see on the left here is an excerpt from a bank contract. In the middle is a third-party contract. But our legal team today have now reimagined their way of working with AI. Why? Because initially they had to go through every page of a contract to identify if there are any deviations. Today, an AI system gets fed all this data the data, the bank templates and the third-party contracts. And this AI system basically summarizes the differences within the contracts and exactly where the difference is being seen. And that is one way to identify these anomalies. Now let's go to, we talked a bit about cybersecurity. So what you see here today is an ID we made for Donald Trump in the space of 5 minutes. Criminals today are leveraging technology to defeat controls within organizations with much ease. And the message is, it's difficult to outspend these threats because apparently on average, it costs $25 for a cyber attack to be launched, and an organization loses up to $10–15 million on average from the impact of an attack. So we see a lot of counterfeit documents in the market, and the only way to fight that is to leverage technology again, where we are able to use deep learning to extract information from documents and input that into algorithms to understand if there is any tampered possibility. The other use case I want to share with you, I'm trying to make sure I don't run out of time, is language models have been very topical at the moment. Google Bard, ChatGPT are topics that are household topics today. And for us in a digital world, we've managed to make sure that we also digitize the way risk professionals access information and access policies and documents. So we've developed our internal search enabled by natural language processing and understanding to make sure that instead of professionals going and manually looking for documents, they are able to search for these policies and access them on demand when they need them. So this is just a short recording of the tool we've developed for people. You can see just the way you go to ChatGPT. We've trained this tool with our internal documents to allow professionals to search and access information as soon as possible when they want. Why is this important? Because when it's easy for professionals to access data, to access information, it enables them make much more accurate and consistent decisions. So you can imagine a world where you've got thousands of documents and thousands of policies. You need high performance computing to make sure that algorithms can scan through all these documents and return the result as expected. And without this, it will not have been possible. And this is a capability that will continue growing and growing. So just to finish off, what high performance computing, AI and data have done is they've enabled us to become more efficient by automating repetitive tasks. Then they've also allowed us to enable professionals to be more effective at what they do. Also enable experts to leverage the same capabilities to do and apply their skills, like data scientists, advisors, to do their things much better. But also ultimately, it's enabled various functions drive innovation. So all these capabilities I have shared with you are driving efficiency, are changing operating models, they're reimagining our processes and making sure that we provide a digital experience, we make consistent decisions, we're accurate and consistent in the way we understand events within our platforms. And all that is because of data, AI, and high performance computing. Thank you. So this just basically summarizes the conversation. Talked about the enterprise risk management landscape, the complexities of managing risks in banking and finance, And I've taken you through capabilities that we are working on that are leveraging AI and high performance computing to modernizing the risk management landscape, and also ensuring that banking is keeping up with the global threats. Thank you so much.
Yeah, thank you very much, Mark, for the fascinating insights, what happens behind the scenes when we do our shopping online. Thank you very much. That's really, was really amazing. I